Managing Committee Ernakulam to begin the proceedings.
Good afternoon, everyone, and welcome to day 6 of NAVARATNA conference, All Kerala Virtual CP conference. And today's day 6 is hosted by the Ernakulam branch of SIRC of ICAI. To begin proceedings, I request the chairman of Ernakulam branch, CA Jose KV, to deliver the welcome address.
Thank you, Tony. Good afternoon, everyone. Most respected Sri Manoj Pandey, IRS Joint Secretary of MCA, and our CCM, Sri Priya Madam, and our RCM, Sadishan Sir, and chairpersons of 8 other branches, managing committee members of Ernakulam and other 8 branches, senior members and friends. We begin this program with a special address by our Manoj Pandey sir. Our official inauguration of this program will happen at 4 p.m. Our chief guest for today, CA Dr. Sanjeev Kumar Singhal, CCM and Chairman of Auditing and Assurance Standards Board of ICAI, will be joining us at 4 p.m. So I'm very glad to say that Ernakulam branch is hosting the day 6. We already had wonderful sessions for the last 5 days as a part of NAVARATNA season 3. And for the information of our special guests, Sri Manoj Pandey sir and CCM Sri Priya Kumar Madam, we started this program in during that COVID time, and all the 9 branches came together and started the NAVARATNA program. It continues, and we are very happy to continue the same thing in the season 3 also. All our chairpersons of all branches we met in Cochin and discussed, and now we are celebrating. In fact, we are celebrating the NAVARATNA program. So now I request our Sri Priya Madam to address and also introduce Sri Manoj Pandey sir. Over to you, Madam.
Here's a very, very hearty good afternoon to all of you. To Sri Manoj Pandey ji, who's consented to join us at very, very short notice. Welcome, sir. To CA Martin Joseph, Jose KV sir, Shiva Prasad, CA Sabu Thomas, CA Santosh Pai, CA Anuja Jayakrishnan, CA Chiranjeev Samuel, and CA Ajit Kaiman. They are the chairpersons of the various branches of Kerala, and this is an all-state Kerala conference. So thank you very, very much for this wonderful program and for allowing us to present for a short while from the Corporate Laws Committee, and more particularly Sri Manoj Pandey ji. We thought it's very important to reach out to all stakeholders, especially in the context of the MCA 21 version 3 launch. And that's why we had requested Manoj Pandey ji to sort of speak to us for a few minutes to explain what this is beyond what I have to state. Manoj Pandey ji heads the e-governance of the MCA. He's Joint Secretary, Ministry of Corporate Affairs, and a very unusual combination at that. He's an IRS officer from the 1992 batch, and so he comes with a huge amount of legacy information that would help India's corporate governance do better. And that is sort of visible in every action that we see of Manoj Pandey ji. And I'm very, very happy to let you know that for the first time, ICAI has embarked on a formal joint project with MCA. We are helping them in the user acceptance testing and implementation of the version 3 of the MCA 21 portal. So the president has been kind enough to sanction 15 full-time resources who are working with MCA and the service provider, which is L&T Infotech, on this project. I'll just speak a few words about MCA 21 version 3. Now, we've all been transacting in the MCA 21 portal. So in the previous version, which is version 2, we used to download the form, fill up all the details, attach the DSC, and upload it. Today, the new portal version 3, which has completely gone live for LLPs and for 9 company forms, you can fill in the data online. So that's the first change, which means in future, after the next year and once the platform stabilizes, you have very little work to do. You only have to submit your changes. The second interesting thing about this portal, which is very, very important, and everybody here may also want to carry this message, is that you need to be a business user. In version 2, you could either be a registered user or a business user to fill a form. But in this version 3, you have to be a business user to be able to fill a form and to file a form, other than 2 forms, which is Run LLP and Fill It. So which means all our professional users have to now become business users. There are very good videos which are available on the MCA website as well as the ICAI website, and we've been running many programs and we've covered almost about 40,000-50,000 man-hours of training on this. Now, just one simple question everybody may ask: why did they need to go for a version 3? I think the answers are very simple. One is, as a country, we've always found that the corporate structure has been very loose, sometimes in terms of governance. So it's very evident from the fact that 3 to 5 lakh companies got struck off. So I think there was an inherent need to improve corporate governance. 2 is there is an overall move of India, not only in MCA, but also in income tax, GST, etc., for digital acceleration. So that this is also been a need to digitally accelerate for ease of doing business for the user. And the third and the most important thing is, today MCA would like to know who is filing the form. Previously, as a registered user, you didn't have to identify yourself with your credential. But today MCA also wants to know, who are you? Are you a valid user? Do you have a PAN number? Do you have a DIN number? And I think these changes, given that the CA fraternity has been very used to it in our income tax filing, etc., I'm sure we'll be able to cope with it. And just one additional piece of information, ICAI has set up helplines. So after this session, I will post the helplines on the chat. But if you have any problem whatsoever, you may approach us to basically even to clcgc@icai.in. We'll have somebody call you and sort your problem. And it's also tremendous learning for us. And with this short introduction, it's over to Manoj Pandeyji to speak a few words on the version 3 launch.
Thank you, Mr. Priya. Am I audible first?
Yes, sir.
So, Mr. Jose Chomin, Ernakulam branch, and other heads of all other 8 branches. It's really a pleasure to interact with you. And as Sri Priya said, that ICAI is partnering with us. So they are, in fact, along with us in rollout of this MCA 21 version 3. That's the reason. The moment Sri Priya called me and said that you should brief the members about version 3, I readily agreed. I said, yes, I should be speaking on this because she is now the equal partner in the progress. So, in all the reviews which happen at the ministry about the rollout of version 3. The philosophy she has explained, but let me also give you some background of this. The version 1 started in 2006, and it was first stage could be of digitization, because earlier it was all manual filing which used to happen with ROCs. Thereafter, in 2012-13, the version 2 was in fact rolled out, and there the corporate cleaning started. In the filing started to be clean so that it becomes a good database. What happens if you may appreciate, because you are also auditors and accountants, whatever you are writing in your report, you are reporting in the annual financials, that actually is tabulated at national level at some, and that aggregate happens, and that projection of corporate growth and some policy decisions are also taken based on that. So it's your MCA 21 filings become very, very important because they give a parameter that what is happening with corporates, what is happening with body corporates like LLPs, whether it's a trend which shows that there is a acceleration or there is a deceleration in the growth. So that becomes very important. So purity of data is also very, very important, because it's for individual chartered accountant, for individual company, even a smallest of the companies, they might be thinking that it's their filing, but actually it aggregates into a national GDP kind of thing, because this is how it's projected, because our data is used by Ministry of Statistics and Program Implementation and all government agencies, because this is considered to be the registry for the corporates. So version 3 had this purpose. Let's start with first, there should be a data purity, and also there should be proper identification of the users. So slide.
Sir, we have a slight lag, sir. Maybe you can go off the video, it will improve, sir.
Change we did on 8th. Okay. Is it okay now? Is it okay now? There could.
Joe, sir, is it better now?
Some disturbances.
No, sir, we're not.
There is still a lag, madam.
Not hearing properly.
There is some problem, madam.
Is it okay now?
Yes, sir, it's better now, sir.
It's better.
Yes, sir.
So, okay. So we started rolling out in phases to avoid inconvenience to the stakeholders. And the first change, if you are a regular visitor to our website, it happened way back in May 21, when the entire thing changed, and we changed for the first time, you could see our ebook functionality carrying all the acts, all the rules, where you can go through the notifications, the rules, and the acts. The website changed. It became more interactive because it's now on AEM technology. Earlier, it was on a different technology platform. And then we thought we will roll out now the forms and different modules which are inside. MCA 21, which were residing in MCA 21 earlier, and which we are planning as in version 3 to be rolled out and to be implemented. So on 8th March, we rolled out LLP. Now, along with that, the registration process also got changed. The login also changed, because these are all web-based forms. So it has to be a post login. You will appreciate. It has to first, you have to enter the portal. Earlier, during registration, simply, I'm not talking about registered in the business users, that we shouldn't, that is a distinction, the technical distinction. Let us assume that a user is using the platform without identifying, means there is no identity, whether PAN, nobody knows that who is using this platform for doing the filings. So, and people used to download the form and upload thereafter, because as Sripriya said, it's a PDF form. Now it's happening on the portal itself, that is a web-based form. Now, during registration, we also saw, while we were migrating to a new registration process, that against one user ID, against one email, there were hundreds of user ID and passwords generated. So it was not very clear whose email ID is this. Sometimes the email ID itself was in a manner which could not have been traced out by ministry. That whose email ID is this and how it's being used, who is using this exactly. So we said, okay, you register and give a unique email ID along with a PAN. And there will be two-factor authentication only once. After going through this exercise of two-factor authentication, you are registered forever and you can transact. Since we are interacting with our professional friends in ICSI and ICAI, and so we also are getting ideas. So one thought came that if one email ID is there, what about the professional staff who might be using this portal? Then we also said, okay, there will be a category of professional staff member, but he will get tagged with the professional membership number so that we know that who is doing this filing. Since you are also gatekeeper of the corporate audits, so you realize that this is important to identify that who is doing the corporate filings on MCA 21. This is one time exercise. It's not repeated exercise. The second change we did that, okay, digital signature certificate. Earlier, it was you could have associated DSC in version 2 on
So we're not able to hear you clearly.
This is the basic fundamental change.
So we're not able to hear you, sir. Sure, sure. I think he has some issue with his bandwidth. He'll join us. Sir, I just spoke to him. He said he'll join from another link. Sir, if bandwidth is an issue, should I ask him to come back on Monday when he's in his office, sir?
Yes, madam. I think we can continue it on Monday.
I'll just speak to him, sir. If he has a problem, I think he's not in office. So
Okay. So we can have a special address on Monday also.
1 minute, sir. Just bear with us for a few minutes. It's never happened before. So.
No problem, madam. These are all technical issues.
Yes, sir. So until sir joins back, maybe I can just brief you on what you might have missed. So the first thing is you need to become a business user. You need to associate your DSC. It's just like declaring your signature to the bank. So once you associated your DSC, then the whole process is seamless. Now, some of us do face problems. There are two kinds of problems. One is problems with the software itself, which have completely been minimized now. But today, we have already filed some data in version 2. So today, for some users, a small percentage, it is seeing that particular data and it's not allowing you to transact further. But that is primarily because there are some issues with the data which is sitting in the system in version 2. It's for this purpose that ICAI has actually set up a team And I'm very happy to let you know that till date, the ICAI team has actually verified 7,500 forms in UAT. So we've done 7,500 UAT tests for forms that have got released till now, and it's sort of in progress. So these are some of the key elements, but the most important part being ICAI is very happy to help. So all chairmen, if you have any issues, you can ask people to forward it to you, and we'll have somebody to actually call you and help you to sort your problem.
Madam, in our chat box, there is a query for you. You can handle
1 minute. So
one chat.
Manoj sir is joined already.
Let
So,
me, sorry, because very short notice, I am not speaking from a place where there could be stable environment. So I'm very sorry for this. And if you have missed out, I'll repeat. What we have done, a user should identify first with unique identification like PAN. Once you associate your PAN with your membership number, or with whatever identity you have, you will get OTP, that is two-factor authentication is done, and you are then registered, what we say as a business user. So you can transact business. The difference between registered user and business user is like this. If you have to use a DSC on a form, you have to become a business user because you have to associate your DSC somewhere. So simple forms like name reservation form will not require a DSC, and therefore we say that anybody can use that form. Anybody can file that form. But since we require a DSC association with unique email ID and user ID and password, that is why you have to first register yourself as a business user. This is what we say. So there is an option that you first convert yourself into a business user. Earlier, if you were a registered user in V2, suppose you had some user ID and password, you can transact on V3 also using that, but you have to register once, giving your PAN or something so that you are identified, uniquely identified, that Mr. X has done this transaction. Earlier, that identification was not always very clear. So if many notices which would have gone, they were going to some IP address without locating a name. Now, if a person, one email ID could have hundreds of user ID password, which ideally should not have been done. Now, what we have said, one email ID, one user, one password you can have. But if you are a professional, you can have a professional staff members in your office. They can all register, and they will all be tagged with your professional staff membership number, so that we know who all have transacted on your behalf. Then your second step will be to associate your DSC. That is also one-time exercise. Once that one-to-one mapping is done of digital signature, because your signature should be unique. Nobody should be associating your DSC without your knowledge. So you have associated your DSC. So that email, user ID, password, and digital signature certificate is identified and tagged, and then you can transact. This is what a change which has been introduced in version 3. The other change is web-based forms. So all forms are web-based. That means that on internet only you are filing the form. So real-time validation happening. You can see errors coming on the form also. And then you can, accordingly, you can fill up the form. The issues could be from the users that the data, which Sripriya mentioned, I could hear, that if the data in V2 somehow is incorrect, then automatically the form, it would be difficult to file a form, because it's real-time validation which is happening. One more thing, it's possible that in PDF forms, you have given certain data in the field, but you have not you have given some other information in the attachment. Now, any system will not recognize the attachment. It will always recognize the fields in the form. So you could have given the information always in the form itself. But to facilitate that, this is what I am saying. It's a weekly meeting which takes place with ICAI and ICSI, with your central teams, where whatever feedback we receive, we introduce, we implement immediately. And that is why when Shripriya said that, should I join and address, I said, I'm happy to interact with anybody anytime, because I have to explain what we are doing. I know that since 8th March 22, there is a change in the entire transaction system. People are finding it slightly difficult. Many people are finding it very easy. If the data was very pure data, in 2 minutes they can file. I do not want to talk about the data as such of the filing of the form, but we are posting it on the website also, that so far we have exceeded LLP filings compared to version 2. Even in form 11, that is annual return, it is exceeded. That is the balance sheet, and now with the form 8 is getting filed, that I think that is also showing a good number. If data errors are coming, I think that we are taking a call how those data should be corrected. And ICAI Shripriya has introduced a system of very good system of mini help desk within our help desk manned by our ICAI, and also a Google Sheet which is circulated by ICAI team. And I can see that every day they are also holding mini meetings with all the chartered accountants and whoever can join, so that your issues get sorted out. 9 forms we introduced in August, and that is also showing a robust filing. Now, that data also we get posted. Today is the last date of Director KYC. We have seen much more filing this year compared to last year. Obviously, the number of directors would have also gone up because the corporations have gone up in companies. But the filing is on upward trend, and in days to come, more forms will get introduced in version 3, and we will wrap it up within January. So all forms will get introduced, and with minimum, we don't want that minimum disturbance, minimum inconvenience. You are entirely on version 3, because you are now used to the registration process since March.
Thank you, sir.
I all appreciate, and first I'll also seek your support, because without your support, this is a partnership. Chartered accountants are also partnership in nation building. We can't see chartered accountants as distinct from the government setup, because after all, this is what you are helping us. And without your support, it's not possible. So I am seeking your support also. And through, in fact, Shripriya and through President Chartered Accountant Institute, you can give your comments and suggestions, which will come to us, and we always look into it. And believe me, whatever mails and whatever details you send on our emails, I track each and every comment and each and every mail, and I know what's happening where.
Thank you, sir.
So with these words, I think I'll conclude, and I'll request the 9 chapters from Kerala. Please get associated with Madam Shripriya's team. The team is helping everybody and giving a feedback to us also. And this is how, in constructive manner, and together we can roll out the entire version 3. Thank you very much.
Thank you, sir. Thank you.
Sir, thank you, sir and madam, for that updates from NCA. Now we are moving to our virtual program, and I welcome everyone to the program. The today's subject, standards on auditing for small and medium enterprises, medium practitioners. We have a very eminent speaker, CA Kamal Garg, very good friend of our branch, and we very lovingly call him KG. He is here. I welcome Kamal Garg also to this year's program, and I welcome all the chairpersons, managing committee members, and our RCM Sadishan sir, and all senior members and friends to this program. Over to you.
Thank you, Chairman. Now we will move on to our first technical session on standards on auditing for small and medium practitioners by CA Kamal Garg. I request the treasurer of Ernakulam branch, CA Anand AS, to introduce our speaker for the first technical session.
Good evening, everybody. It is my pleasure to introduce the chief guest of the seminar and the speaker for the seminar. The chief guest of the sixth day.
No, Anand sir, chief
Yeah.
guest, we will have inauguration later. You can introduce Kamal Garg sir.
Okay.
Yes.
The respected speaker for the session is Mr. Kamal Garg. May I introduce him? Introduce him to the audience here? CA Kamal Garg is a fellow member of the Institute of Chartered Accountants of India and a first-class commerce graduate from Deen Dayal Upadhyaya College, University of Delhi. He has also qualified post-qualification course on Diploma in Information System Audit, DISA, conducted by ICAI. Besides this, he is also an insolvency professional registered with Insolvency and Bankruptcy Board of India, IBBI. He has also qualified certificate course on BRSR conducted by ICAI. He was also the member of Board of Studies, BOS, Study Material Research Group 2009 to 10 of NIRC of ICAI, and a special invitee member of Accounting Standards Board 2012-13, 2020-21, and 2022-23. Financial Reporting Review Group of FRRB ICAI 2020-21, and IFRS Implementation Committee 2014-15 and 2020-21-22 of the ICAI. He was also nominated as a special invitee member to the Committee on Banking, Insurance and Pension 2014-15 of NIRC of ICAI. He is also the resource person for Peer Review Board, Corporate Laws and Corporate Governance Committee, and Committee on Financial Market and Investors Protection of ICAI. Besides being a regular guest speaker for IFRS and management development programs at various forums including ICAI and ICSI, he is also an author of over dozens of books and commentaries on and including IFRS.
Sorry for interruption, Anandji. I believe we should start the session.
Okay.
So it's enough of the introduction.
Okay. So with this, the introduction is pretty large. So with this, I introduce the speaker, Mr. Kamal Garg, to the audience. Thank you.
Thank you, Anand sir. Now I request our speaker, CA Kamal Garg, to begin our first our technical session for today. Over to you, Kamal Garg, sir.
Thank you, Mr. Tony. And I welcome each one of the participants to this program. Good evening to each one of you. Thankful to the chapter Ernakulam branch of SIRC of ICAI and our CCM ma'am, Shri Priya ma'am. Before I delve upon the topic and discuss in detail, please don't search on Google. I'm having a question for you. The question is, the topic given to me is standards on auditing for small and medium practitioners. So the first question is whether any exemption is there or not to the small and medium practitioners for complying with the applicable auditing standards. I'm asking this question for a very big reason. The big reason is when people sign the audit report, and in the audit report, one of the paragraph is that we have complied with generally accepted auditing principles in India. The question arises, if we are signing the audit report, in a way we are declaring that we have complied with the auditing standards. So the question arises, how many of us do know whether auditing standards which we are complying are applicable upon us or not? Any answer? Don't worry, I will share my PPT and I will send the PPT to the Ernakulam branch also. So because generally people do ask as an audience whether we will get the PPT. You will get the PPT, but that PPT is a psychological advantage. Ultimately, deliberation counts. So if you're a small and medium practitioner, whether all the auditing standards are applicable upon you. Let me take an instance. The instance is small and medium practitioner is nowhere defined. Small and medium practitioner is nowhere defined. So as a matter of contemporary understanding, people do believe that if you are auditing non-corporate entities or small and medium companies, then you are a small and medium practitioner. Agreed. In a way, I can agree. So the question arises, let us assume Mr. Tony is a CA in practice and he is appointed as tax auditor by one of the proprietor. Question arises whether Mr. Tony, being the auditor of proprietorship firm for the purpose of Income Tax Act as a tax auditor, whether he needs to comply with the auditing standards issued by Institute of Chartered Accountants of India. And don't worry, Mr. Tony, this question is not for you. This question is for the population. Yes, any answer? Let me ask you question number second. One of the prominent expression nowadays is small company. Quite recently, on 15 September 2022, the thresholds for small company were also revised. So let me assume this way, my learned friend, the chairman Ernakulam branch, Mr. Jose. So he is the auditor of a small company. Now question arises, if he is the auditor of a small company under the Companies Act, whether Mr. Jose needs to comply with all the auditing standards issued by Institute of Chartered Accountants of India. So now the two questions are before you. One is the tax auditor, second is the statutory auditor. Are they required to comply? So what I am getting the answers in the chat box are yes. I'm getting the answer as yes. But the question arises, are we complying with the auditing standards? So please don't say yes or no here. Otherwise secrets will be revealed. But the fact is, I'm sorry to say these words, but the fact is, most of us are not complying with the auditing standards. I will cover some case studies to make you people understand where we are making the contravention. But before I share the case studies, let me emphasize one thing remarkably. The topic given to me is standards on auditing for small and medium practitioners. Please understand the remarkable point is small and medium practitioners are nowhere defined. It is a kind of contemporary expression, customary expression, which people are using. So I'm sharing my screen. Mr. Jose, please confirm me once my screen is visible. Is my screen visible, Mr. Jose?
Yes, yes, sir.
Okay. So I was telling you that small and medium practitioners are nowhere defined. So question arises how to have the understanding of whether I am a small and medium practitioner or not. For this purpose, the customary understanding is if a chartered accountant in practice is carrying out the audit of small and medium sized company or the audit of non-corporate entity, then in general, such chartered accountant in practice is considered as a small and medium practitioner. So for this purpose, before we go deep into what auditing standards are, let us first understand what is small and medium sized company. I would request each of the participants to keep their notepad and pen ready for taking the crucial notes. Most of the things are on PPT, but majority things are also not there on PPT. So whatever I will be deliberating, please take a note of that thing. So I'm first discussing when a company shall be classified as small and medium sized company. Now, please be attentive. You must be aware that Ministry of Corporate Affairs notified Companies Accounting Standard Rules 2021. I emphasize, Ministry of Corporate Affairs notified Companies Accounting Standard Rules 2021. Rule 2, Subrule 1, Clause E. Rule 2, Subrule 1, Clause E of Companies Accounting Standard Rules 2021 states that a company shall be considered as small and medium-sized company if such company is falling in these parameters. These parameters are not easy parameters, let me tell you. So let us understand one by one. Parameter number one, a company whose equity or debt securities are not listed, I emphasize the word not, are not listed or are not in the process of listing on any stock exchange, whether in India or outside India. So there is a company ABC Limited. If that company is neither listed nor in the process of listing, whether in India or outside India, then such a company shall be classified as small and medium-sized company subject to other parameters which are as follows. Number second parameter, a company which is not a bank, financial institution or an insurance company. So if a company is not a banking company or a financial institution or an insurance company, then such company shall be classified as small and medium-sized company subject to other parameters. I have a small question to each one of you. Please reply my question in the chat box. Mallapuram Finance Limited. Let us assume Mallapuram Finance Limited. Forget about other parameters. Tell me, merely on the basis of this second parameter, I repeat, merely on the basis of this second parameter, whether Mallapuram Finance Limited is a small and medium-sized company or not. Yes or no? Let me ask you a question in a different way also. Fusion Microfinance Limited, FUSION, Fusion Microfinance Limited, G Capital Limited, Bajaj Capital Limited, ABC Microfinance Company, whether these NBFCs, non-banking financial corporations, can be classified as small and medium-sized companies? Answer is no. Answer is no. Please see the words financial institution. Please take a note. The expression financial institution is being defined under Section 2, Clause 39 of Companies Act. Repeat, expression financial institution is defined under Section 2, Clause 39 of Companies Act. And Section 2, Clause 39 of Companies Act includes NBFC as a part of financial institution, meaning thereby, in simple words, non-banking financial corporations, whether listed or unlisted, shall never be classified as small and medium-sized companies. Then is turnover. A company whose turnover, excluding other income, is not exceeding rupees 250 crores in the immediately preceding accounting year. Simple condition only. Borrowings. A company whose borrowings, including public deposits, are not exceeding rupees 50 crores at any time during the immediately preceding accounting year. So these companies shall be classified as small and medium-sized companies. I have a small question. The word used is borrowing. The word used is borrowing. Question arises whether this word borrowing will include bank overdraft or not. Please respond in the chat box. Whether this word borrowing will include bank overdraft or not. So let us assume there is a company ABC Private Limited, and ABC Private Limited is having the outstanding bank overdraft of rupees 60 crores. Whether it will be classified as SMC or not. Answer is no, it cannot be classified as SMC because the expression borrowing will include bank overdraft as well. I am posing a second question before the house. So second question is, let us assume the company is ABC Private Limited. ABC Private Limited received rupees 60 crores, hypothetical question only. ABC Private Limited received rupees 60 crores as unsecured loan from its directors. Whether this ABC Private Limited will be considered SMC or not. Any answer? I repeat my question. ABC Private Limited received rupees 60 crores as unsecured loan from one of its director. Whether ABC Private Limited be classified as small and medium-sized company. Answer is no. Answer is no. It will not be taken as SMC because the word is borrowing. So in this borrowing, the amount borrowed from the directors will also be included, although it is exempted from the definition of deposits. Then is holding subsidiary. If your company is a holding company or subsidiary company of any other company, then your company cannot be classified as small and medium-sized company. So primarily, it is a contemporary understanding, general understanding that if you are the statutory auditor of small and medium-sized company, then you will be deemed as, or you will be considered as small and medium practitioner. Second limb is you may be the auditor of certain non-corporate entities. You may be the auditor of certain non-corporate entities like proprietorship firms, partnership firms, HUF, cooperative societies, LLP, and so on. So in these very cases, if you are the auditor like tax auditor under Income Tax Act or auditor under Cooperative Societies Act, in such a case, you may be considered as small and medium practitioner. Now I have a question. Please try to respond back this question in the chat box. Listen my words very carefully. If you go to Companies Act, we do have section number 143, subsection 9. You can take a note of this section. Section number 143, subsection 9 of Companies Act states that the auditors shall comply with auditing standards while carrying out audit of the companies. I repeat, section 143, subsection 9 of the Companies Act 2013 states that the auditors shall comply with the auditing standards while carrying out the audit of companies. Having listened to this sentence, you may say that irrespective of whether the company is a big company or a small and medium-sized company, if you are carrying out the audit of these companies under the Companies Act, you are under an obligation to comply with the auditing standards. But the question arises, what if you are the auditor of proprietorship firm? What if you are the auditor of partnership firm or the auditor of HUF, etc., etc.? Is it written somewhere that you have to comply with auditing standards even when you are the auditor of non-corporate entities? Yes, any answer? Is it written somewhere? And if you say it is written somewhere, then I need to know where it is written. Like I got the answer from Mr. Roy Thomas that it is written yes. Yes, any answer? So if I type the question on the screen, let me type the question on screen. My basic question is, if you are auditor of company, mandatory to comply standards on auditing. Where it is written? Section number 143, subsection number 9. Auditor of other entities. Is it mandatory to comply SA? And if the answer is yes, the question arises where it is mandated. Yes, any answer from the audience? Like Mr. Rahul says, ICAI SQC1. Again, Mr. Rahul, I would be having a question. Where it is written that you have to comply with SQC1? I have an answer from CA Tony. Yes, in the technical guide and guidance note of ICAI. Again, my question is, where it is written that you have to comply with technical guide? Please remember, technical guide is recommendatory in nature, not mandatory in nature. Technical guide is not mandatory in nature, it is recommendatory in nature. So my question is, where it is written that it is mandatory to comply with the auditing standards or standards on auditing? So your responses are giving the hint that we perhaps are lagging the knowledge of where it is written that SQC1 or standards are mandatory. Like again, I'm getting the answer from Mr. Rahul. SQC1 is mandatory to be followed for all assurance engagements. I agree, Mr. Rahul. But my question then is, SQC1 is also a part of your engagement and quality control standards. So where it is written that you have to mandatorily follow and comply SQC1. So let us resolve this issue. For this purpose, we have to go deep dive this way. Just see the very first block, which I already covered. In terms of section 143, subsection 9 of the Companies Act 2013, auditors shall comply with the auditing standards. However, as we noted and observed, this section is not applicable in case of non-corporate entities. So the question arises, is there a literature which mandates that auditing standards also need to be followed and complied by the auditors for non-corporate entities as well as corporate entities? For this purpose, we have our parent act, that is Chartered Accountants Act. So if you refer second schedule of Chartered Accountants Act, second schedule of Chartered Accountants Act 1949 part 1 states that a member in practice shall be guilty of professional misconduct if he, I'm emphasizing certain words, if he, number one, fails to disclose a material fact, fails to report a material misstatement, is grossly negligent in conduct of his professional duties, fails to obtain sufficient information necessary for expression of an opinion, and lastly, it is very important, fails to invite attention to any material departure from the generally accepted procedure of audit. So when we say fails to disclose material fact, for this purpose, we do have SA 200 and SA 450. When we say fails to report a material misstatement, for this purpose, we have SA 200 and again SA 450. When we say is grossly negligent in conduct of his professional duties, for this purpose, we have SA 200. When we say fails to obtain sufficient information necessary for expression of opinion, for this purpose, we have SA 500 series. And when we say fails to invite attention to material departure from generally accepted audit procedure, for this purpose, we have all the SAs. So what is happening over here? The Chartered Accountants Act is mandating all the chartered accountants in practice that while discharging your attached function as an auditor, you have to comply with the auditing standards. The story is not yet over. The story is not yet over. The Institute of Chartered Accountants of India has issued engagement and quality control standards, which is having 5 components in all. The first component is standards on auditing, SA. The second component is standards on related services, SRS. Third one is standards on review engagements, SRE. Fourth one is standard on assurance engagements, SAE. And last one is standard on quality control, SQC1. All these 5 components put together contemporarily are also called as generally accepted audit procedures. The story is not yet over, as I said. Why? The reason is simple. The Auditing and Assurance Standard Board of ICAI, the Auditing and Assurance Standard Board of ICAI also mandated the compliance of these auditing standards and guidance notes. Auditing standards and guidance note to be complied with by the chartered accountants in practice while discharging their audit function. So if I read out standards issued by AASB, AASB stands for Auditing and Assurance Standard Board. Standards issued by AASB under the authority of Council of ICAI. These statements on auditing are issued with a view to securing compliance by professional accountants. I emphasize, with a view to securing compliance by professional accountants on the matters which, in the opinion of Council, are critical for proper discharge of their functions. Statements are therefore mandatory. Statements are therefore mandatory. Now, what are these statements? These statements are nothing but the components over here: SA, SRS, SRE, and so on. Most importantly, para 11 of preface to standards on quality control, auditing review, other assurance, and related services, which is effective from 1st April 2008, categorically states that it is the duty of professional accountants to ensure that the standards, statements, general clarifications are followed in the engagements undertaken by them. Overall, the scenario is, if I go back to my question, the scenario is to comply with the auditing standards vis-a-vis the audit of company, the mandate is given under section 143(9). To comply with the auditing standards vis-a-vis other entities, that is the entities which are not falling in the purview of Companies Act, the mandate is given by Chartered Accountants Act plus AASB announcement in the preface. So ultimately, you have to comply with the auditing standard irrespective of whether you're auditing under the Companies Act or you're auditing for non-corporate entities. Now, I have a statement in the chat box, level 4 entity need not follow. So Mr. Venkata Subramanian, the fact is your answer that level 4 entity need not follow is only in respect of accounting standard. Today, our program is on auditing standard. Whatever your statement is there is vis-a-vis the accounting standard. I believe I made my point clear. So level 4 entity, whatever you're writing is in respect of accounting standards only, not in respect of auditing standard. So if I say it in a much more layman sense, let me type on the screen, in much more layman sense, what I would say, whatever be the nature of entity or size of the entity, if you are the external auditor, that is auditor under any law, then you have to comply with the applicable standards on auditing. So you can take a note of this layman statement, which is a critical statement. So I believe this point is clear to each one of you. And if I say as an example, if you are the tax auditor, of a proprietorship firm, even then you have to comply with the auditing standards. Now let us harmonize audit report under Companies Act and audit report under Income Tax Act with our auditing standards. Let us try to harmonize. Just see on the screen, if you refer section 143 subsection 2, if you refer section number 143 subsection 2, section 143 subsection 2 states that auditor shall report under the provisions of this act after complying with the accounting standards and auditing standards with respect to true and fair view. Accounting and auditing standards need to be complied with, where it is written section number 143 subsection number 2. Now, what I'm trying to say, please take a note of the words true and fair view. The expression true and fair view is not defined by Companies Act. So where we will go? We'll go to auditing standard. What is the auditing standard for this purpose? You can take a note. I'm writing over here. The auditing standard for this purpose is SA 200. But the further statement is written. Section 143 subsection 3 clause A says that auditors need to obtain all the information and explanations. Please focus on these two words. What are these two words? Information and explanation. So they are saying auditor need to obtain information and explanation for the purpose of audit. What is this information? This information is known as audit evidence under SA 500. What they are further saying? That auditors need to obtain explanations. What is this explanation? It is nothing but SA 580, that is management representation letter. So you cannot say that auditing standards are not covered by the Companies Act. The fact is, company law says that you have to obtain information. Company law says that you have to obtain explanation. But Companies Act is not telling us what procedure, what principles we need to follow for the purpose of obtaining this information and explanation. So where we will go? We will go to SA 500 and SA 580 respectively to understand the principles and procedures for obtaining the information and explanation. Then if you see section number 143 3C, what they say, auditors have to report whether they have dealt with report on the accounts of branch office. So for the purpose of report on the accounts of branch office, company law is silent. How to deal with the report of branch office auditor. For this purpose, what we will do? we will go to auditing standard number 600. That is using the work of other auditor. Similarly, if you see highlighted portion again, auditors have to report about the observations or comments with respect to adverse matters. So for this purpose, we have SA 700 series. Please understand, company law says that you have to report, but what shall be the format of that report? What shall be the content of that report? And what shall be the type of audit report? I repeat, company law says you have to report, but company law is not telling you what shall be the format of the report, what shall be the content of the report, and what shall be the type of report. We people usually say qualified report, disclaimer report, adverse report. Have you ever thought that qualified report, adverse report, disclaimer report is nowhere used in the Companies Act? Companies Act simply says that you have to report your observations and comments. So for this purpose, what shall be the format of report, what shall be the content of report, and what shall be the type of report? We had to refer SA 700 series.
Excuse me, sir. Kamal sir.
Yes, Mr. Jose.
Yes, our chief guest Sanjeev sir has raised. He is in our.
Okay, I will wait for his deliberation, then I will continue.
Yes, sir. Thank you. Thank you. Yes, good afternoon, Sanjeev sir.
Good afternoon. Good evening.
Yes.
Namaskar, Sanjeev ji.
Namaskar, Kamal ji.
Welcome, Sanjay ji.
Thank you, Babu Bhai. Thank you. How are you?
Thank you very much for joining despite your busy schedule.
My pleasure, Babu Bhai. We can't say no to you.
So kind of you.
And Joman sir also here.
Hi, Joman ji. How are you?
I'm fine, sir. Thank you so much.
Okay, so
thank you for joining.
Tony, over to Tony.
Thank you, everyone. So we will begin our inaugural session. I request the motto song of ICAI to be played.
येष सुप्तेषु जाग्रति येष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्द्वैता 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 एतद्द्वैता.
Thank you, everyone. I request the chairman, CA Jose KV, to address the inaugural session.
Good afternoon, everyone. Most respected CCM and chairman of Auditing and Assurance Standard Board of ICAI, CA Sanjeev Kumar Singhal, sir. Our chairman of NAVARATNA and our regional council member, CA Sadishan, sir. Our past Central Council member, Babu sir, past SIRC chairman, Joman sir, the chairpersons of other 8 branches, Kannur, Shivaprasad sir, Kozhikode, Santosh Pai, Palakkad Anuja madam, Trichur Ajit Kaimal, Kottayam Sabu Thomas, Alapi Martin Joseph, Kollam Sabu CS and Trivandrum Cherian G, and managing committee members of Ernakulam branch, Vice Chairperson C. Deepa, Treasurer C. Anand, Secretary C. S. Salim, Committee Member C. Tony, other managing committee members of other 8 branches, and my dear senior members and profession who and joined from Kerala as well as outside Kerala. Ernakulam branch is very glad to host the 6th day of NAVARATNA program. And on the subject, we have already started the topic on standards and auditing for small and medium-sized practitioners. As we know, the NAVARATNA program we started 2 years back during that COVID pandemic time, and then chairman of all the branches, they mooted this idea, and Vimal from Palakkad, Palakkad chairman at that point of time, and with the help of our Babu sir and Joman sir started this program, and it's went well in last 2 years as well as the last 5 days also, and now we are on the 6th day, and I'm sure the NAVARATNA program really makes all the branch comes together. We had all Kerala chairmen meet at Trichur as well as in Ernakulam, and we are planning every quarter there will be a all Kerala chairmen meeting. We are very glad to announce that we are going for not only for CP seminar, we are planning a all Kerala cricket match for members, inter-branch cricket tournament, and also all Kerala inter-branch football tournament as the part of initiative of this NAVARATNA. So NAVARATNA, what I want to say that it's never ends only with this program. It will continue with more of this kind of programs. I'm very happy to welcome our chief guest for this today's session, C. Sanjeev Kumar Singhal, none other than our Chairman of Auditing and Assurance Standard Board of ICAI. I, on behalf of Ernakulam branch and all the members here and participants here, I welcome Sanjeev sir to this program. And I also welcome our own RCM and conference chairman, C.S. Adishan sir. I also welcome our Babu sir, the past Central Council member, Joman sir, past chairman SIRC of ICAI. And also I welcome all the 8 chairpersons from different branches and all the MC members, Ernakulam as well as all other branches and all the participants, senior members and friends to this program. Thank you.
Thank you, Chairman. Now I request the past chairman of SIRC of ICAI, C. Jomon K. George, to address this online conference.
Thank you, Tony. Hope I'm audible, clear?
Yes.
Yes, sir, audible.
Good evening to all of you. Respected C.S. Sanjeev Kumar Singhal, the chairman of AISB, and a very learned speaker for this very important topic, C.A. Kamal Garg from who has been taking us through the nuances of standards and auditing. The chairman of the Ernakulam branch, K.V. Jose, who is the lead branch today. C.P. Sadishan, the only RCM from Kerala and the chairman of the NAVARATNA conference, the 9 branches. Babu Abraham sir, a former CCM. Other 8 Ratnas, NAVARATNA's Jose has been addressed. Other 8 Ratnas, chairman of the other 8 branches. MC members of the other branches, and 242 of the members who have glued to us on this online platform on a Saturday afternoon, when they could have a well-earned Saturday afternoon snooze, fellow colleagues and friends. I'm extremely delighted to be with you online this fine evening, to be part of this NAVARATNA program. We have been seeing all the programs. Let me first compliment all the 9 chairmen for the excellent, unified, well-synchronized, cohesive efforts they have put in for the successful conduct of NAVARATNA conference season 3. C.A. Jose KV has given the detail, I mean, how all the whole program of having 9 branches together started from Palakkad, and now it has become a big movement, bringing so many members on this platform. Extremely happy that this time also it is going very well, seamlessly, with excellent speakers and very befitting guests every day. Sanjeev ji cannot be called a guest, but then still the chief guest today. And the topic has been very carefully chosen. All the topics, and today is something which is very close to my heart. I too had the good opportunity of being a member of the ASB way back in 2005-6, 17 years back. And I've seen sir, I'm probably putting in a word on behalf of you, Sanjeev sir. I've seen the kind of work which is going in the formulation of auditing standards. We had SAPs which were turned to AAS, and now we have from 2008, the classification which Kamal Garg has very, very plainly listed in his PowerPoint presentation. And the only thing which is still painful is about standards and auditing is that the level of compliance is still dismally poor. And with a company, and today we are talking about small and medium practitioners. It is not whether you are small or big what matters. Whenever there is an expression of opinion, Companies Act 143(9), yes. Now, whenever there is an expression of opinion on the financial information, the whole government, the whole lot of standards and auditing would come to apply. And when it comes to assurance engagements, we have SAEs, reviews, SREs, and related services like compilation engagements, SRS 4410, and therefore all these things are very important. I'm sure that in the rest of the time available, Kamal Garg would surely take us through the complete. It can only be a run through because there's a paucity of time. So let me also be short, wishing NAVARATNA for what has been done is excellent, and what is waiting to be done would also be of great flavor and will provide a rich feast of knowledge to the members. My compliments to Satishan, CS Satishan also, RCA from Kerala, who's serving as the chairman of SICASA and at the SIRC, and to every one of you. And once again, a big thank you to Sanjeev Singhal sir, because it is good to hear from the horse's mouth when we are deliberating on standards and auditing. So Jose and everyone there, once again, a big thank you for having me here. All the best. Stay tuned. Let us look forward to a great learning session. Thank you so much.
Thank you.
Thank you, Jomon sir, for your wonderful words. Now, I request our past Central Council member, our very own CA Babu Abraham Kalivel sir, to address this online conference.
Yeah, distinguished Chairman of the Standard Auditing and Assurance Standard Board of the Institute of Chartered Accountants of India, and my good friend and former colleague in the Apex Council of the Institute, CA Dr. Sanjeev Singhal ji. He is one among the 2 doctors in the council. The other doctor is the president of the institute today, and
Babu, now there are 4 doctors in the council.
Oh, 2 more doctors. Good, great.
Dr.
Great.
Raj Chawla and Dr. Rajkumar Adukia.
Oh, okay, great. That is good. When I was in the council, you are the only 2 doctors. Therefore, and I'm extremely glad that a person who is so familiar with the auditing is heading the Auditing and Assurance Standard Board of the India, who has got hands-on knowledge and experience on the core auditing, and which we all know, assurance is our
Babu sir, we can't hear you. You're not audible.
Tony, I think it's a signal problem. Probably one of you could call it.
I'm trying.
Babu sir has joined back. Sir, you're on mute. Please unmute yourself. And Babu sir, you're on mute.
Yes. Thank you. And the all chairman and the office bearers of the Ernakulam branch. Congratulations for hosting one of the most important topic. Probably today standards and auditing is, I always feel that it is not getting the required attention from among our members. I used to serve in the disciplinary committee of the institute, and whenever a disciplinary matter comes, if you are able to showcase yourself that you are within the framework of the standards and auditing, I'm sure you are quite safe. Therefore, standards are the principal focus which provides a framework for performing the audit. Therefore, whether an audit is being conducted at Cochin or audit is being conducted at Delhi, the end results has to be the same. Therefore, that is the purpose for which the standards have been introduced. And I think now this institute has come out with standards covering every aspect of the auditing. Therefore, it is a laudable measure that we have chosen this topic, especially for the small and medium practitioners, where we need to have, because today standards and auditing is not only mandatory by the code of conduct and the guidance of the institute, now it has got the statutory teeth under the Companies Act. As an auditor, you are required to make sure that all standards and auditing are also being complied with. Therefore, I'm sure that I'm extremely glad and delighted the chairman of the Auditing and Assurance Standard Board of the Institute has joined us. I'm sure all of us are eager to hear from him, and we have a prolific speaker like CA Kamal Garg on enlightening us on this important topic. I'm once again thank Sanjeev Singhal for joining us. Thank you. I wish this conference all the very best. Thank you.
Thank you, Babu sir, for that wonderful words. Now I request our regional council member and chairman Chikasa, CA Sadishan P, who's also the conference chairman for this Navaratna 2022 to address this gathering.
Thank you, Tony. Chairman of Ernakulam branch, KV Jose sir, and our today's chief guest, Sanjeev Kumar Singhal sir, our beloved CCM, chairman of Assurance, Audit and Assurance Board, and other faculty, expert faculty, Kamal Garg, Vice Chairman Deepa Varghese, Secretary Salim sir, Treasurer Anand, Sikasa Chairman Suresh ji, and members Tony Varghese, Aslin, Joby George, Rubesh, Rajagopal, and other 7 chairman and 1 chairperson from Palakkad. Other managing committee members, our beloved past Central Council member Babu sir, and my very good friend and past chairman of SIRC, Jomanka George. Very good evening to all of you, and I am very happy that this is the 6th day of the Navaratna program, and the last 5 days we went very nicely. The programs well appreciated, and I hope that the coming days also will be very nice, and the members will get enriched with good programs, good subjects. So I wish all the best to the program, and I know Joman sir is passionate regarding the audit assurance standard and accounting standard. So thank you, sir, for your participation, and Babu sir also participated, and thank you, sir, for your wishes to the program. And I hope that our CCM will enlighten our regarding this subject, and our Kamal Garg will also already started. I am just hearing what he is saying. Very nicely he is presenting from SA 200 to 810. It's going on. So I hope that the members will definitely get benefit and understand what is the importance of the auditing and assurance standard. So I think this will be a very good session, and I wish all the success again. And today, as Ernakulam is the largest branch in Kerala, that is why we are very happy to say that today just few minutes address by MCA Secretary Manoj Panda sir also address regarding the version 3 of MCA, and Sri Priya madam also just have some words on that. And this is a special event on today, so I hope that everybody will clear this. Today is the last day for the DIR 3 filing, and whatever the issues, you can contact the ICAI to clear the problems. With this, I once again wish all the best to the program. Thank you to all.
Thank you, Sadishan sir, for those wonderful words and your wisdom. Now I request the Vice Chairperson of Ernakulam branch, Madam C.A. Deepa Verghese, to introduce our chief guest, Dr. C.A. Sanjeev Kumar Singhal, the Central Council member and Chairman, Auditing and Assurance Standard Board of ICAI.
Thank you, C.A. Tony. It's indeed a privilege to be introducing the main person for the day, the chief guest, C.A. Dr. Sanjeev Kumar Singhal. Sir is the chairman of Auditing and Assurance Standards Board as well as the Sustainability Reporting Standards Board. He's also a director of XBRL India, SAFA Committee on Auditing and Quality Standards, the chairman of Task Force SAFA on Sustainability. Sir is an FCA with 23 years of experience, and he has done his PhD in International Finance from Faculty of Management Studies, Delhi, after doing his BCom honors from SRCC, where he was a Delhi University topper, and an MCom from Department of Commerce, Delhi School of Economics. He's also done certificate course on IFRS from ICAI and has received more than 100 merit certificates for academics. He is currently working as a partner in SR Vatliboi and Company LLP Chartered Accountants, before which he has an industry experience as the Vice President Finance at Cyber Media, Vice President at Jubilant Life Sciences, Executive Vice President Finance at Relay Gear. He's also worked as a partner with BL Agarwal Soswatia and Company and worked as an associate professor at Ford School of Management. Sir has authored over 14 books which has been published by leading publishers and has published several research papers published in leading journals and ICAI publications. With these words, sir, may I request you to kindly deliver your presidential address for the day. Over to you, sir.
Thank you very much, C.A. Deepa ji. A very good evening to you all, friends. My very senior council colleague in the 24th Council, C.A. Babu Ibrahim, Babu Bhai, as we call him, who has always worked for the interest of the members and students, and also for the southern region. We know that the efforts that he has done for the Ernakulam branch building in the 24th Council. So Babu Bhai certainly deserves applause, and Babu Bhai has been the key person for inviting me to this program. C.A. K.V. Jose, the chairman of the Ernakulam branch, C.A. Joman K. George, the former chairman of the SIRC, the regional council members from the SIRC, the chairman, chairpersons, and the managing committee members of the NAVARATNA branches. In fact, this is really a good concept. This also helps in giving a size to a program, and the physical outreach programs that was mentioned is also really great. This will actually integrate 9 branches within Kerala. Friends, I'm indeed grateful to all of you for inviting me to this program. Let me talk about, as far as this topic is concerned, what Babu Bhai said, an audit is an audit, whether it is done from Cochin or it is done from Delhi, it will be the same. The auditing principles would be the same. We don't have a concept of auditing standards which are different for less complex entities. Actually, you can't have different auditing standard for small and mid-sized firms, but you can have different auditing standard for the companies or the entities that you audit. So for large companies, the auditing standard could be different, and for small companies, the auditing standard could be different. The IAASB is working on making separate audit standards for less complex entities, as is being called. However, the auditing principles, the fundamentals remain the same. So as of now, there are about 42 auditing standards which have been issued by the Auditing Standard Board of India. And this year, since the time I have taken over as the chair of the Auditing and Assurance Standard Board, our endeavor has been to equip the member with the best of the knowledge and And for this purpose, they should not be required to pay a fee for the same. So what we have done, the key initiative that we have taken is, when the bank audit season was there, then from April 1 to April 15, we had a 50-member expert panel on answering the queries relating to bank audits. Thousands of queries were answered by this 50-member expert panel, which was drawn from all over India. Then what we did, probably the largest initiative in the world we have taken, we started a statutory audit panel. So if you have any audit query in any of the audit that you are doing of a corporate sector or a non-corporate sector, we run this helpline from 16th of April to 30th of September. Again, 50 experts were involved and a number of queries were answered pertaining to the auditing matters. And both these helplines were operating free of cost for the members of the Institute of Chartered Accountants of India. No other institution in the world has run a helpline of this size where more than 14 lakh entities were going on, and we were able to answer all the queries that were raised before the expert panel. Again, the experts were drawn from all over India. Friends, we have also published background material on the various auditing standards, and it's available for free to download from the AASP website. We have also done 88 programs on various auditing standards in this year from the Auditing and Assurance Standard Board. And more than 102,000 members have attended these programs. Some of these programs have been done on a physical mode, and some of these programs have been done on a virtual mode. And we have covered all the auditing standards. We have covered all the guidance note on auditing. We have covered Schedule 3. We have covered CARO, and we have also covered the specialized topics within the auditing standard. And nowadays we are covering sector-wise, for example, real estate sector, financial sector, etc. The peculiar features of audit of those sectors. Friends, it is pertinent to note that whether we are doing a small company audit or a large company audit, as a professional accountant who is bound by the code of conduct of ICAI, we remain responsible for the work that we deliver. And Financial Reporting Review Board picks up the balance sheets which have been audited by the auditors on a sample basis, and it goes through a very stringent process. Similarly, now peer review mechanism has been made mandatory. From the next year, audit quality maturity model will also be made mandatory for the various audit firms, where there is a self-scoring mechanism, and the audit firm will have to comply with those norms. And friends, NFRA has also been coming out with very stringent orders on some of the audit reports. Friends, expectation gap has arisen in the society. The expectation of the society is all-time high from the auditor, and auditing is core to our profession. So we need to rise to the occasion and meet the expectation of the society. Yes, I agree. If the society expects that the auditor will be able to detect all frauds, that cannot happen. However, at the same time, whatever samples they pick as per the auditing standard, and in those samples, if there are no errors, then fine, they are not responsible. But in those samples, if errors remain, then the auditor will be responsible. We are also bringing the concept of digital assurance. In digital assurance, we'll be guiding our members, wherein for some of the areas, they can do 100% check rather than a sample check. For example, you can reconcile the sales with the GST returns. You can reconcile the provident fund with the basic salary by logging into the EPFO. You can reconcile. You can see whether a company is a MSME or not through the MSME portal. So we are making a list, and we are working with the Security Exchange Board of India for those areas where even 100% audit will be possible. Recently, we also came out with an announcement on the bank balance confirmations, where we have advised our members to obtain confirmations directly from the bank rather than relying on third parties. And friends, there are some of the very commonly observed errors which are published by Financial Reporting Review Board for the attention of all members. See, for example, many a times I've seen in the audit report, auditors writing that stock is as certified and valued by management. Debtors and creditors are subject to reconciliation and verification. Please note that if these items were material, then the auditor was required to qualify, because if the auditor has not observed the physical verification of inventories, that is, I will say, he has not discharged his duty. Similarly, if the debtors and creditors have not been reconciled, have not been confirmed, or alternate procedures have not been applied, then an auditor cannot be discharged from his responsibility by simply writing that these are subject to verification and reconciliation, or these are as verified and reconciled by the management. These are some small examples. Similarly, when we rely on the work of an expert, for example, an actuary or a valuer, we remain responsible for our work. While we can rely on their opinion, but finally, audit opinion is our opinion. So we must keep that in. We have also observed in some cases where ICFR, audit of internal control over financial reporting, was mandatory. Some of the auditors have not even attached the ICFR report. So these are the instances which we must avoid to restore the trust of the society. And friends, as I'm also the chairman of the Sustainability and Reporting Standard Board, this is another very important emerging area which will give professional opportunities to our members. We have recently also formed Section 8 company of Institute of Social Auditor of India, whereby the NGOs will be able to list themselves on the social stock exchange. And this Institute of Social Auditor of India will govern the social auditor. We are working on the ESG assurance also, and that may also become reality soon. I'll not take much time, otherwise, there is a lot to deliberate on sustainability also, because in sustainability, we are leading the world. Right from the United Nations to IFAC, to PAFA, to SAFA, to CAPA, we have presence all over across the globe, or if it is the local regulator like SEBI, MCA, or institution like NITI Aayog, the Sustainability Reporting Standard Board is working with all these regulators and all these institutions. Friends, knowledge is something which is very, very fundamental to any professional. And this endeavor of these Navaratna branches in this regard is really appreciable. And once again, my sincere thanks for giving me an opportunity for interacting with the members of these branches. Thank you very much.
Thank you, Sanjeev sir, for your words of wisdom. We sure hope to see more of you and hear from more from you in the future events as well. Now I request the Secretary of Ernakulam branch, CA Salime, to deliver the vote of thanks.
Good evening to all. Thank you so much, CA Dr. Sanjeev Kumar Singhal, CCM and Chairman, Auditing and Assurance Standard Board. In your assiduous schedule, you are addressing our CA fraternity, enlightening on auditing standard, on various standards and the importance of and implementing usage of auditing standard, how to support and fulfill the stakeholders' need following up each standard. Thank you so much, sir. And I also thank our past chairman, Jomon K. George, addressing the gathering. I also thank our Babu sir and giving a enlightenment on these standards. Thank you so much, sir. I also thank our RCM and conference chairman, C.S. Adishan sir, for addressing the gathering. And I thank all the 9 chairmen of Navaratna and all the participants from the various branches and the managing committee members. And I thank today's speaker of the day. Thank you so much.
Thank you, Sanjay bhai. Thank you very much for joining.
Thank you, Babu bhai.
Your busy schedule.
My pleasure, Babu bhai. Thank you, sir. Thank you very much, sir.
Thank you, sir, for your participation.
So thank you. Now, with that, we will continue with our technical. Over to you, Kamal Garg, sir. We will move on.
Thank you very much. So I'm resharing my screen. Kindly confirm once my screen is visible. Okay.
Yes, sir.
My screen is visible. Okay.
Yes,
so I was telling you that companies that simply says that auditors have to report on the financial statements. But Companies Act is silent about what shall be the format of report. Companies Act is silent about what shall be the content of report. Companies Act is also silent as to what shall be the type of report, as we popularly call as qualified report, adverse report, disclaimer report. And for this purpose, I was telling you that we do have SA 700 series. Similarly, if you refer section 143(3)(g), it says that auditors have to report whether directors are disqualified or not under section 164 subsection 2 of Companies Act. Even for this purpose, certain principles are given under SA 250. SA 250 deals with consideration of laws and regulations in audit of financial statements. So whenever you are evaluating whether certain directors are disqualified or not under section 164 subsection 2 of Companies Act, you need to evaluate. But how? You need to evaluate the same as per the principles and the guidance given by SA 250. Again, the same thing, qualification, reservation, or adverse remark. For this purpose, we do have SA 700 series. Now for other section 143(3)(i), that is, auditors have to report whether internal controls over financial reporting are effective or not. For this purpose, you have to refer SA 610 and guidance note. And for Rule 11 matters, there are many other matters. For this purpose, you have to refer SA 250 and SA 500 series. So if you see at a macro level, most of the content for how to report under the Companies Act is not dealt by Companies Act itself, is dealt by various standards like SA 700 series, SA 500 series, SA 200, etc., etc. More importantly, I need to ask you certain questions. When you see section 143, we are into Companies Act. We are into Companies Act. Let us assume you are the tax auditor. Now, if you are the tax auditor, either you will be furnishing Form 3CA or you will be furnishing Form 3CB. Without searching on Google, can you please respond back in chat box whether Form 3CA or Form 3CB are using certain words or expressions? I repeat, whether Form 3CA or Form 3CB are using certain words or expressions for which there is a direct nexus with the auditing standards. Can you please provide certain words or expressions which are used in Form 3CA or Form 3CB, which are having direct connection with auditing standards? For your ease of reference, just have a look over here. Para 3 of Form 3CA. Para 3 of Form 3CA is before you. And please focus upon the red highlighted words. If I read this paragraph, in my /our opinion, the word opinion needs to be synchronized with auditing standard, that is SA 700. And to the best of my or our information, the word information needs to be synchronized with SA 500 audit evidence. And according to examination of books of accounts, examination of books of account again needs to be synchronized with SA 500, including other relevant documents and explanations given to me / us. So see the word explanation need to be synchronized with SA 580, management representation letter. The particulars given in the said Form 3CD are true and correct, subject to the following observations and qualifications. See the words observations and qualifications. These words need to be synchronized with SA 700 audit report. In the same fashion, similarly, certain expressions are used in Form 3CB also. So I will not read these highlighted words of Form 3CB. Let me directly come to the point. I have tabulated all these words and expressions over here. So please be attentive and see what is happening over here. On the left-hand side of the table, you will find certain words and expressions. Like first one is obtained information. These words, obtained information. These words, obtained information. You will find these words and expressions are used in Form 3CA, in Form 3CB, and in other format of audit report. So what is the applicable standard? For the words that we have obtained information as an auditor, the applicable auditing standard is SA 500 audit evidence. So this word information in auditing terminology is called as audit evidence. So you cannot say that auditing standards are not applicable for tax audits. They are applicable. Similarly, the words used are obtained explanations. So we always write, we have obtained explanations. Who will explain you? Management will explain you. So if management is explaining you, in that very case, which auditing standard is applicable? SA 580, written representations. People popularly called it that management representation letter. We have also seen that the words used are, we have obtained information and explanation necessary for the purpose of, see the words, necessary for the purpose of audit. Now, what is the meaning of necessary? The word necessary means assessment of audit risk and our responses to the audit risk. What is audit risk? I will discuss separately. But for the purpose of evaluating what is necessary, what are the applicable auditing standards? SA 315 and SA 330. Then branches. We have obtained the report from the branch auditors. For the purpose of branch auditors, whatever report you are getting from them, what auditing standard you will follow? You will follow the standard number SA 600. Please tell me whether branch audit report is considered by tax auditor or not. Any answer? Whether there is anything in tax audit report regarding branch audit report. Yes or no? Is there something there? Because if you will say yes, something is there for branch audit in tax audit report, then obviously SA 600 will be applicable. Yes, Mr. Jose, any answer from your side? Because when audience will not reply, then chairman has to reply. Yes.
Yes, sir.
Just see here, para number 2 of form 3CB. In para number 2, form 3C, what is written? Head office at this place and these branches. So it means that even for tax audit purposes, if separate branch auditor is there for that proprietorship firm, in that very case, you have to deal with same as per SA number 600. But we are writing, we have examined the books of accounts. How to examine? Why to examine? We are examining to evaluate whether there is any misstatement or not. For this purpose, we have SA number 450. Similarly, in the audit reports, whether under the Companies Act or under the tax audit, we always write our observations and explanations. For this observation and explanation, we have SA 700 series, that is SA 700, SA 705, SA 706. What these standards are dealing? These standards are dealing with form and content of audit reports. If I proceed further with the same way, these are the words and expressions. Now, there are certain standards. There are certain standards which are laying down the procedures for audit. For example, with respect to stock, investments and pending litigations. With respect to stock, investments and pending litigations, the procedures are given by SA 501. Audit evidence, additional consideration. With respect to compliance with applicable laws and regulations. With respect to compliance of applicable laws and regulations. For example, section 43B, 40A of Income Tax Act, PARO, GST, etc. One example I took for director disqualification. So when as an auditor, for any entity, corporate entity or non-corporate entity, you have to check whether applicable laws are complied with or not. Which standard you will comply? You will comply with SA number 250. That is consideration of laws and regulations in audit of financial statements. Opening balance and comparatives. Auditors have to check whether closing balances of previous year are brought forward correctly or not in the current year as opening balances. For this purpose, we have SA 510. I have a small question. Small question is, you must have always asked yourself, accounting treatment of prior period items. So when you do the accounting treatment of prior period items, don't you think as an auditor, I have to check whether accounting of prior period item is correct or incorrect? To check whether accounting of prior period items is correct or incorrect, we do have SA 510 as well as SA 710. SA 710 deals with comparatives. Then is external confirmations. So you need to confirm account balances from third parties. How to confirm? The procedure is given by SA 505. How to evaluate whether going concern is appropriate or inappropriate? SA 570 is there. How to examine event occurring after balance sheet date, subsequent events? SA 560 is there. How to examine, how to voucher verify transactions with parties related? SA 550 is there. So in income tax also, you have section number 40A3. For 40A3 also, SA 550 need to be complied with. Similarly, when client is engaging you that please carry out my audit, you have to sign a contract with him. That contract technically is known as letter of engagement. For this letter of engagement, we have SA 210. Now, in my practical experience, I have seen everything is there. Board resolution appointing you, shareholders approval appointing you, everything is there. ADT 1 is also there, but letter of engagement is not there. So when letter of engagement is not there, it is a contravention of SA 210. And lastly, documentation. That means you have to prepare the audit file. For this audit file, the applicable standard is SA 230. I have a small question. Don't search on Google and try to respond back in the chat box. The question is, auditors need to prepare and preserve their audit file. I repeat, auditors need to prepare and preserve the audit file. What is the period for which audit file needs to be preserved by the auditors? What is the period for which audit file needs to be preserved by the auditors? Any answer? I got one answer from Mr. Keyur Dave. 8 years. Wrong answer, sir. So I'm getting mixed answers. 8 years, 6 years. All these are wrong. 10 years, wrong answers.
7 years.
7 years is the correct answer. So I got the answer, Mr. Rahul Joglekar. 7 years is the correct answer. So please take a note. As per Standard on Quality Control 1, SQC 1, the period of preservation is 7 years. Question number 2 for you. These questions are not in the PPT, so I am asking orally. Please take a note of these things on notepad. So first statement I made is preservation of audit file is for 7 years. Number 2 question. You done away with the audit, you completed your audit, you signed the audit report. So when you done the audit, you signed the audit report, you prepared working papers, and working papers are prepared in loose leaf. So on A4 size paper, on some other pages, several working papers were there. So my question to the people is, what is the period within which the audit file needs to be assembled by the auditor? What is the period within which audit file need to be assembled by the auditors? And the sub question is, this period shall be counted from which date? So I got one answer 60 days, I got one answer 30 days. 30 days, is a kind of contemporary scenario. When no days are known, 30 days are always there. So someone is writing 21 days also. 60 days is the correct answer. Please take a note. Audit file shall be assembled within 60 days from the date of signing of audit report. I repeat, audit file shall be assembled within 60 days from the date of signing of audit report. The same period is for UDIN also. Am I clear? Shall I proceed? So audit documentation preservation period is 7 years. Second thing, audit file needs to be assembled within 60 days from the date of signing of audit report. So these days shall be counted not from the AGM date. These dates shall be counted not from the board meeting date, from the date of signing of audit report only. Having said that, what is audit risk? Any idea? And don't worry, I will be troubling you some more because I do have around 16 case studies. These 16 case studies primarily are my experience of the mistakes committed by the chartered accountants. So we can learn from people's mistakes. So I will share those 16 case studies with you in a while. But prior to that, question is, what is audit risk? Any idea? So auditors are signing the audit report. Are they under any risk? Is that risk the audit risk? So NAFRA will call you or ICAI will call you. Is that the audit risk or something else is the audit risk? Why I am asking this question, if I go back, I showed you necessary for the purpose of audit. So you will take the information what is considered necessary by you. So when you consider something necessary, you need to apply SA 315 and SA 330, and these two standards collectively deal with audit risk. So what is audit risk? So one answer I got is risk of giving wrong opinion. Other answer is material misstatements. Okay, quite close answers. Let me ask you as a layman. Let us not make the session too much technical. As a layman, I need to ask you. Let us assume my dear friend KV Jose sir signed the audit report. Now, after signing the audit report, can Mr. Jose give the guarantee that now financial statements have no misstatements? Can any one of you give the guarantee after signing the audit report that now there is no misstatement? Can this guarantee be given? Answer is no. Meaning thereby, despite signing audit report, always there is a probability. Always there is a probability. Please focus on this word, probability, that financial statements may still contain certain misstatements. Am I correct? I repeat my statement. My statement is, despite signing audit report, there is always a probability that financial statements may still contain certain misstatements. Am I correct? Yes or no? Answer is yes. This probability that financial statements may still contain certain misstatements in audited financial statements technically is called as audit risk. Technically is called as audit risk. Am I clear? So for this purpose, let us understand through one of the diagrammatic presentation. So what is audit risk? Audit risk is the possibility or the probability of misstatements in financial statements despite audit being carried out. Simple words. I'm not going into technical definition, but simple word is probability or possibility. I repeat once again. What is audit risk? Audit risk is the possibility of misstatements in the financial statements that may remain despite audit being carried out. This word possibility technically is also called a susceptibility. So susceptibility of misstatements in the financial statements despite audit being carried out technically is called as audit risk. This audit risk can be of three types. This audit risk can be of three types: inherent risk, control risk, and detection risk. Inherent risk, control risk, and detection risk. Now, what is inherent risk? Inherent risk is the possibility of misstatements in the financial statements when there is no internal control system. If you see the words, due to no ICS, ICS means internal control system. So the entity is having no control mechanism, and due to this, the misstatement is arising. That is nothing but inherent risk. What is control risk? Control risk is the possibility of misstatement due to weak internal control system. What is detection risk? Detection risk is the possibility of misstatement due to weak substantive procedure. As a layman, I would say substantive procedure means vouching and verification procedures. So auditor did vouching verification, but it was weak in nature, due to which misstatements were not identified. It will lead to detection risk. Let me ask you some questions as an example. The example or the question is, let us take this way. For participating in this seminar, webinar, for participating in this webinar, let us assume a fees of rupees 500 was kept. Assumption only. For participation in this seminar or webinar, a fees of rupees 500 per participant was kept. So whosoever will pay fees of rupees 500 can participate in this program. What happened? One of the person who was not a chartered accountant paid the fees of rupees 500 and he participated in this program. So the policy was that this program can be attended only by the members of ICAI. I repeat, the basic policy was that this program can be attended only by the members of ICAI. But what happened? A class 12th boy paid rupees 500 and participated in this program. Is there any risk? Can you see any risk here? The risk is their inherent risk. What is the inherent risk? The inherent risk is there is no policy to verify whether the participant is a member of ICAI or is a non-member. And this will lead to inherent risk. What is the inherent risk? The inherent risk is unauthorized access to the webinar. Are you getting my example? What is the inherent risk? The inherent risk is unauthorized access to the webinar. So I can change the example also. Say, for example, I am a chartered accountant and I wish to participate in the program just for the CPE hours. So what happened? I paid the fees, enrolled with my membership number, but switched off my camera and my article assistant was attending. So there is the inherent risk that the members who enrolled might not attend the program, rather some proxy will be attending the program. So this is happening because of no internal control system on the participants. Are you getting my point? This is nothing but inherent risk. So this inherent risk in my example is leading to unauthorized access to the program. Understood? Second example. Control risk arises because of weak internal control system. So now what is the weak internal control system? I am a member of ICAI. I wish to participate in this program, but I don't want to pay fees. So what happened? I called upon Mr. Jose and I requested him, Mr. Jose, I wish to attend this program, but I don't want to pay the fees. So Mr. Jose said to me, please come to the program. I will make you panelist. So what will happen? The control system is weak. Why? Management is in a position to override the controls. When management is in a position to override the controls, it will lead to control risk. Now detection risk. What is detection risk? Vouching verification procedures are failing. So what happened? The profit and loss statement of Ernakulam branch is saying that total participants 200 multiplied by rupees 500 per participant as fees. Total revenue collected is 1 lakh. This is what P&L account says for Ernakulam branch. I am saying a hypothetical example, so don't go here and there. But what happened? The attendance record, which was downloaded from Zoom app, was showing that de facto 220 participants were there in the program. So what is happening? As per Zoom app, 220 was the attendance. But as per P&L account, 200 was only the attendance. So that means there is a detection risk for 20 candidates. Why it happened? Because auditors' vouching verification procedures failed in identifying the reason of misstatement. Are you getting my point? So this is a small example just to make things clear. If this example is clear to you, I have a small question. The question is, tell me, who is primarily responsible? Who is primarily responsible for detection risk? I use the word primarily. Who is primarily responsible for detection risk? Management or the auditor? Who is primarily responsible for detection risk? Management or the auditor? It is the auditor. Because who do vouching verification? Vouching verification is done by auditor only. So prime domain is auditor. Can I say, please tell me whether I'm correct or incorrect. Can I say for inherent risk and control risk, management is responsible? Can I say for inherent risk and control risk, management is responsible? Ask the question this way. Who is responsible for internal control system? Auditor or the management? Management only. It means that inherent risk and control risk are the responsibilities of management. Now, a small question. The small question is, apply your logic and reply me. If inherent risk is more, then detection risk will go down or will go up? If inherent risk is more, then detection risk will go down or will go up?
Go up.
Go up. Think again, sir. Okay, ask the question to yourself in another way. You are the auditor. You evaluated inherent risk. You are the auditor. You evaluated inherent risk. And you came to a conclusion that inherent risk is more. That means internal control system is absent. So auditor is of the view that internal control system is absent. That is why inherent risk is more. he will do more vouching verification or less vouching verification? He will do more vouching verification. More the vouching verification, detection risk will come down. Are you getting my point? So please take a note. SA 315 says inherent risk is inversely related to detection risk. Control risk is inversely related to detection risk, meaning thereby when auditor will evaluate that either internal control system is absent or internal control system is weak, then he will carry out more and more vouching verification. And that way he will try to bring down the detection risk level. But there is a precondition that auditor must be independent. He must not ignore the evaluation of inherent risk and controls. If he will ignore, then obviously there will be no relation between IR and DR. Am I clear? Now, having said that, please think here and advise me, can there be certain situations, I repeat, can there be certain situations whereby auditor may face difficulty during the audit, or I should ask this way, whereby there can be some problematic relationship between management and the auditor? I repeat, can there be certain situations other than the audit fees? Audit fees always is a situation. Other than audit fees, can there be certain circumstances which may result in problematic relationship between auditor and the client? Yes or no? Can there be situations like that? Answer is yes. Answer is yes. There can be circumstances whereby there could be certain, stiff relationship between the auditor and the client. Can I say if relationship between the management and the client is stiff, is problematic, it may lead to difficulty in audit by the auditor? Answer is yes. Management may not cooperate. For this purpose, Institute of Chartered Accountants of India in SA 240 states that certain difficulties may be faced by the auditor during the audit. Let's see here. What are the difficulties? Denial of access to records, facilities for seeking evidence. For example, not providing access to internet. Number second, undue time pressures to resolve complex issues. For example, continuous request by the management to complete audit at the earliest. Complaints by the management about conduct of the audit team. For example, article assistants wasting time in gossips and client is always complaining this thing. Key IT and other operational areas, systems, etc. denied to be accessed. For example, not providing computers for carrying out audit examination. Unwillingness by management to permit auditor to communicate TCWG. TCWG means those charged with governance. For example, audit committee. You can take the example. Management requests the auditor for not informing audit committee about funds misused by the managing director. Tolerance of violations of entities code of conduct. For example, using Facebook in office hours. Now, my question to the people is, if you face this kind of difficulty during the audit, how this difficulty will be impacting your audit? Any answer? If you face this difficulty during the audit, how this difficulty will be impacting your audit? Any answer? So the answer lies in SA 700. I'm writing something over here. Please try to respond back by your yes or no. Immediately after this, we'll do some case studies. So my question number one is, can such difficulties or circumstances lead to limitation on the way you can or you could have carried out the audit? Yes or no? Whether these difficulties or circumstances cast a limitation upon your scope, that is the manner on which you could have carried the audit. Answer is yes. It is casting a limitation. If I will not be given access to the internet at the client place, it may cast a limitation upon me. So what ICAI says in SA 700 series, if any limitation on scope of auditors' duties is casted by the management, then auditors may issue qualified report. But precaution, but document the reasons for such qualification along with the circumstances, public situations, casting limitation upon you. Am I clear? So what the standard says, if client is creating problem for you, then you should consider issuing qualified report. But let me be very frank. Most of the times, especially in case of bank audits, this situation will be faced by you, undue time pressures to resolve complex issues. Most of the cases you will face that client is always, pestering you, issue the audit report ASAP, as soon as possible. So when this kind of pressure is created, it is a kind of indication that limitation on your scope is casted. So always, please remember, always when limitation is casted, qualified report is not issued. It is only when such limitation is hampering you and you are not able to complete the audit as per your choice, then only you will issue qualified report. So if the client is casting limitation, but despite that limitation, you are able to complete the audit as per your own desires and standards, then there is no need to qualify the report. But always document that client was disturbing you. Am I clear? Jose sir, till this time, any question? So I am giving you the opportunity to each one of you to ask your questions, because immediately after now, I will be asking my questions in case studies. So should you have any questions, you are most welcome to ask now.
Till now, no questions, sir.
No questions. So shall I presume all clear, or shall I presume we are out of the senses now?
I think everyone is listening.
Listening, okay.
Yeah, any questions they can post in the Q&A box.
So if you have no questions now, you can ask the questions later stage also, no problem. So Jose sir, with your kind permission, I am starting the case studies on standards and auditing. I would request the audience to please respond back their answers so that we can evaluate ourselves. Are we complying auditors or are we non-complying auditors? Here comes case study number 1 for you. Rahulji are very much right. Either all clear or nothing clear. Okay. Case study number 1. I read this case study for you. Please try to respond back. I am switching off my camera to ensure the good bandwidth. So first question is, Mr. X is the auditor of ABC Private Limited for the financial year 21-22. He is of the opinion that there is no need to wait and gather external confirmations because it involves much time and cost. In the notes to accounts, however, the management disclosed that certain debtors and creditor balances are subject to confirmation. Your answer, please. I am giving you 1 minute. Think and respond back. So I will not rush. I will wait for your answer, because whatever case studies, ladies and gentlemen, I am taking are the practical real world case studies, and perhaps one or more of you may fall into these case studies also. So I'm giving you 1 minute. Please try to respond back. You can type your answer in the chat box. So any answer? I got an answer from K.O. Daveji. Not acceptable as for true and fair view, whether assets are recoverable and true. Auditor must do the confirmation. Murli sir is also giving the answer. He is wrong. Kayur sir and Murali sir, can you please elaborate your answer, or maybe can you give the hint of this answer by referring to the auditing standards and Companies Act? So rather than your answers going towards the logic is correct. I'm not denying that, but can you please couple your answer with Companies Act provisions and SA provisions? Okay. Yes, Murali sir, your statement is right now. Time and cost is not the reason. Yes, Kayur sir, you're also right. So just see what is happening over here. Let me highlight. See very carefully. He is of the opinion that there is no need to wait and gather external confirmation. Is this statement correct? Answer is no. Why the answer is no? Let me put it here. If you refer section number 143, subsection 3. Section number 143, subsection 3 says, auditor need to obtain necessary information. Now, what is this information? Information means that is audit evidence. Under SA 505, external confirmation is one kind of audit evidence. So when the auditor says in this case study, what he's saying, that there is no need to wait and gather external confirmation. So this statement is wrong. Why this statement is wrong? Because by virtue of section 143.3, read with SA 505, he is under a legal and professional obligation. He is under legal and professional obligation to obtain external confirmations. Number one. I'm not yet over. Further, what the auditor says, it involves much time and cost. This statement is also wrong. Why this statement is wrong? Reason number one is before you. Reason number second is SA 500 and 505. What they say? Time and costs cannot be the excuses for not obtaining necessary audit evidence. Are you getting my point? So time and cost cannot be reasons or excuses. Now, what he further says, in notes to accounts, however, the management disclosed that certain debtors and creditors balances are subject to confirmation. This sentence is also wrong. Management may write what they are wanting to write in the notes to accounts, but we do have SA 700 read with SA 705. What they say, if balances are subject to confirmation and are material in nature, then qualify the report. Similarly, there is one more point. The point is SA 700 read with SA 706. If balances are subject to confirmation and are not material in nature, then emphasize the report. Are you getting my point? Is this clear? Is case study number one clear? Please say yes or no in the chat box so that I can proceed further. So whatever auditor was saying here is grossly wrong. The answer is before you. You can take a screenshot of this answer, because this answer is not in my PPT, so you can take a screenshot of this answer. Now, case study number 2 for the people. The auditing client has provided rupees 2 lakhs as provision for bad and doubtful debts in the books of account, while the auditor is challenging this provision and opines that it should be rupees 5 lakhs. After much deliberations and considerations, both auditor and auditee concluded at a provision of rupees 4 lakhs. The auditor did not document these deliberations and considerations, as he is of the view that once he is satisfied, there is no need to keep any such record in his file. So what happened in this case study? Client is saying, in our view, provision for bad and doubtful debt should be rupees 2 lakhs. Auditor is of the view that provision for bad and doubtful debt should be rupees 5 lakhs. Now a dialogue was going on, a discussion was going on between the auditor and the client. Finally, they came to a conclusion that provision will neither be rupees 2 lakhs nor be rupees 5 lakhs, but it will be rupees 4 lakhs. So now auditor did not document this dialogue and discussion with the client because he is of the view, if I am satisfied, then why I should do this documentation? Is he correct? Logically, you can give the answer, and after logic answer, please try to coordinate this answer with the applicable auditing standard also. As any answer, I give you 1 minute to answer back. So there is one answer from Mr. Murali, all working papers to reach the final conclusion. Okay. Answer is correct, but how the standard says this thing and which standard says this thing? KURG documentation is required to prove as per Ind AS 37. I'm sorry, KUR sir, your first half answer is correct. Documentation is required, but Ind AS 37 and AS 29 are not applicable to provision for bad and doubtful debts. Ind AS 37 and AS 29 are applicable to provisions which are the liabilities. So each provision is not dealt with Ind AS 37 or AS 29. And provision for bad and doubtful debt is not a liability. Rahulji is saying SA 230 documentation. Answer is correct, Rahulji. So let me coordinate. Just give me a moment. If you refer SA 230, SA 230 states that audit documentation, whether manual or electronic, is a record comprising of, now be careful, comprising of audit procedures applied, audit evidence obtained, and audit conclusions achieved during the course of audit by the auditor. Now, if you see 3 points I have written over here: audit procedures, audit evidence, and audit conclusions. Please respond back in the chat box where this case study number 2 will fall primarily. Whether this case study number 2 will fall in audit procedures, audit evidence, audit conclusions, primarily. Primarily, this will fall in audit conclusion. So standard says that you have to document even the audit conclusions. And because you have to document even the audit conclusions, in my question, this auditor is wrong and he has to document the reasons on how and which procedures were applied to arrive at such conclusion. So documentation is must. So please try to understand, logically, your answer was correct. But standard wise, the answer was having no correlation. So what the standard is, SA 230, where even documentation of audit conclusions is made mandatory. You can take the screenshot of this PPT if you wish. Case study number 3. Be very careful when you reply or respond to this case study. In my experience, this is one of the most, I must say, critical case study and one of the most common mistake which happens in real world. ABC and Company is a partnership firm. I emphasize that this case is not of a company, but of a partnership firm. ABC and Company is a partnership firm. The depreciation was provided in the books of account in accordance with the rates prescribed under the Income Tax Act 1961. What audit considerations should be observed by the auditor in this regard? I should emphasize, let us say, tax auditors in this regard. Please understand, this is not a small or an easy case study. I repeat my case study once again. ABC and Company is a partnership firm. The depreciation was provided in the books of account in accordance with the rates prescribed under the Income Tax Act 1961. Assume that you are the tax auditor. So what audit considerations should be observed by you in this question? I give you 1 minute to respond back. Okay, you sir, your answer is wrong because you are answering as per Schedule 2nd. Schedule 2nd is not applicable on partnership firm. Schedule 2nd is applicable only on companies. Answer is there from C. Tony also, deferred tax asset or liability. Tony sir, your answer is quite close to the right answer, but if possible, can you please elaborate more how it will be DTA or DTL? Any other answer? I repeat and emphasize, this question belongs to the entity partnership firm, not to the company. Kayur sir, your answer useful life is correct, but whether partnership firm needs to consider useful life, if the answer is yes, where it is written, if the answer is no, where it is written. So please try to understand what are the audit considerations over here. Sorry for the spelling mistakes. Audit consideration number 1 is SA 200. What it says, auditors need to comply applicable FRF. FRF stands for Financial Reporting Framework. That is applicable accounting standards. What is the note over here? The note is such partnership firm could be level 1, 2, 3, or 4 entity. Irrespective of that, such firm needs to comply AS 10 issued by ICAI. AS 10 says provide depreciation as per useful life. What happened here? Depreciation in books is provided as per Income Tax Act. This is wrong because such depreciation is meant for ITR purposes and not for books of accounts. So SA 705, sorry, SA 700 read with SA 705 and Form 3CB. What they say? Qualify the report because AS 10 is not followed. Am I clear? You can take a screenshot if you wish. Kayurji, am I clear now? Tony sir? And whatever, obviously, whatever difference will be there between depreciation as per books and depreciation as per income tax, corresponding deferred tax will arise. So please remember that this question, somebody may say, is devoid of auditing standards, but auditing standards are applicable. See what auditing standards are applicable. SA 200 is applicable. SA 700 is applicable. SA 705 is also applicable. And if you refer the guidance note on tax audit, guidance note on tax audit also says that applicable auditing standards shall be complied even by the tax auditors. Here comes next case study number 4. The statutory auditor of PQR Limited did not verify the physical existence of its fixed assets. They have taken a written management representation about the fact that the fixed assets have been verified by their own staff and are existing as shown in the fixed asset records. The statutory auditors relied upon the same, but later on it was traced that some fixed assets were in fact not existing on the balance sheet date. The auditors were charged of gross negligence and they are defending themselves under the cover of declaration given by the management. So simple question is, auditor did not verify the physical existence of the fixed assets, popularly called as property, plant and equipment. Why he did not verify? Because he was given a declaration or a management representation whereby the board of directors wrote that we have verified fixed assets and everything is in order. Auditor relied upon the same and then issued the audit report. After some time, it was found that fixed assets were merely on papers, but they were not in the premises. And hence, disciplinary case started against the auditor. Auditor said, I'm sorry, I'm nowhere wrong because I relied upon the management. So please respond back with your answers. Is auditor right or wrong? And if he is right or if he is wrong, what auditing standard is behind the whole gamut of this question? Yes, any answer? Audit is right. Like I got one answer from Mr. Roy Thomas. He says he's right. Mr. Roy, I'm afraid your answer is wrong. There is one answer from Mr. Murali Krishnan. Mere representation is not enough. They should have also obtained the procedure and papers to prove that verification was done. Mr. Murali, your answer is absolutely perfect. But can you please quote the auditing standard applicable for it? So I am copying the answer given by Mr. Murali, and I will use the same answer for my own answer as well. For this purpose, we have SA 580. It deals with written representations. And it says MRL or management representation letter or written representation is one kind of audit evidence, but it does not absolve the auditors of their responsibility. Now be attentive over here, responsibility to examine the veracity, public reasonableness of such MRL/WR. Just give me a moment. So in simple words, what I'm trying to convey, I'm pasting the answer given by one of the participants, Mr. Murali. Mere representation is not enough. The auditor should have also obtained the procedure and papers to prove that verification was done. The same answer which I wrote here is applicable even for inventories. Like in most of the audit report, it is being written by the auditors, even in company's audit report order. Even in PARO, para 3.1 and para 3.2, auditors are writing that inventories as valued and certified by the management. This sentence is wrong because it is not allowed by virtue of SA number 580. So am I clear with this answer? Ladies and gentlemen, if there is any doubt over here, you are most welcome to ask. And please understand that this standard SA 580, which I wrote over here, is applicable even for statutory audit and for tax audit as well. Here comes next case study. I will skip this case study. If time will permit, I will come back to this case study. Because why I'm skipping this case study? Because the solution is already there in the PPT. So when you will get this PPT, you will refer this answer and you can understand. Let us come to case study number 6. Mr. A is the principal auditor of XYZ Limited. Mr. B is the auditor of branch of this company. Mr. B has issued a qualified report for this branch. Mr. A is of the opinion that he is not required, I emphasize the word, he is not required to consider the opinion of other auditor. Please reply for this question in the chat box. And when you reply, please give the appropriate reference to the provisions of Companies Act as well as the auditing standards. So auditor is saying that I am the auditor and I need not consider the report given by the branch auditor. How far he is correct? So is he correct or incorrect? Give me the reasons also. Any answer? No answers? Am I audible or am I not audible?
Audible, sir, audible.
Okay, thank you very much, Mr. Joss. So I got one answer from Mr. Murali Krishnan, SS 600 and section 143. Yes, correct. I am getting the correct answers perfectly. Mr. Tony is also right. Srijit is also right. So let me put it on the screen. See, first is legal obligation. In this question, first one is legal obligation. What is the legal obligation? If you refer section 143 subsection 3, auditors have to consider branch auditor's report. This is a legal obligation. Then there's a professional obligation. Professional obligation is same as is worded in section 143.3, and this professional obligation is given by SA number 600. More importantly, there's a note. If you have noticed carefully, it is written that Mr. B has issued a qualified report for this branch. So what is the note? Mr. B has issued a qualified report for this branch, and such report may have an impact upon financial statements of the company as a whole. And that's the reason that even SS 700 says, consider the same. That is the impact. So what is the answer? The correct answer is auditor is wrong over here. He cannot shy away from this branch audit report. He has to consider this branch audit report by virtue of three reasons: legal obligation, professional obligation. Professional obligation, we have two parts, SA 600 and impact of the branch audit report, SA 700. I believe this point is clear to each one of you. Here comes next case study. Be very careful now. ABC Limited, a listed company, has appointed 4 joint auditors for the financial year 21-22. So there are 4 auditors. Let us assume these 4 auditors are Mr. L, Mr. M, Mr. N, Mr. O. So 4 joint auditors are there, L, M, N, O. What happened? 3 of these auditors have issued an unqualified report, but 1 of them has issued a qualified report. The management of the company is contending that majority opinion is binding upon the individual auditor, and accordingly he cannot issue qualified report. So what happened over here, if I put it in a layman's sense, so there are 4 auditors, Mr. L, Mr. M, Mr. N, and Mr. O. Mr. L issued clean report. Mr. M also issued clean report. Mr. N also issued clean report. But Mr. O, what happened over here? He issued qualified report. So now management says that Mr. O needs to follow the opinion given by majority auditors, that is Mr. L, Mr. M, Mr. N. So management says, management is saying that you cannot issue qualified report. Management says he cannot issue such report. Is he correct? I mean, is the management correct? Like I got one answer from Mr. Roy, auditor O is free to express. Yes, answer is correct. That means logically we are correct. Mr. O can issue qualified report, and that ensures independence of Mr. O. Where it is written? It is written in SA number 299. SA 299 says, SA 299 deals with joint audit. It says that majority opinion is not binding upon individual auditor. So that means Mr. O can issue his own individual report separately from other joint auditors. I believe this is clear to each one of you. Here comes next case study. The senior partner of ABC and Associates, or CA firm, calls upon the audit assistant and instructed him to follow the same materiality level as adopted during the last year, unless the internal control system has been deteriorated substantially. Comment. So what happened? Let us assume Mr. KV Jose is the auditor. He called upon his staff and told him that you need not revise materiality level unless and until internal control system is deteriorated. So question arises, can we keep the same materiality level in the current year also, assuming that internal control system is still the same? Answer is no. So I need to ask, ladies and gentlemen, I need to ask a question. Besides internal control system, what are the factors that may be required to evaluate materiality level in the current year? Please give me 1 or 2 factors in the chat box. Besides internal control system, what can be the other factors to decide the materiality? So if I give the answer, for this purpose, we have, let me see, something is there in, yeah, Murali sir, you are right, scale and change in operations. So for this purpose, we have SA number 320. It deals with materiality. What can be the factors? One factor is internal control system. Second factor is nature of business. Third factor is legal requirements. Can you give me any example of legal requirements? Any example of legal requirements? Meanwhile, other factor could be going concern matter. And there can be many n number of factors. I need to know from the house any example of materiality given by the law. For this purpose, you have Schedule 3. Schedule 3 says any item of income or expense which is more than the highest of rupees 1 lakh or 1% of revenue shall be separately disclosed in notes. So this is nothing but a legal materiality only. So each year the revenue may be fluctuating, and that's why the materiality level will be revised. And that is the reason that merely internal control system is not the factor for your materiality assessment. There are several other factors also. And for this very big reason, SA 320 also states that review materiality each year. I believe this example is clear to each one of you. Should you have any doubt, you are most welcome to ask. Okay, I am proceeding further. I will skip this case study number 9 because I have covered this case study during my initial deliberation. Let me come to case study number 10. A very good case study, especially for those who are doing audits of PSUs or maybe audits of large companies. Let us assume the client is BHEL, Bharat Heavy Electricals Limited. Let me give a disclaimer. This question is only for the sake of exemplification, hypothetical situation only. So the client is Bharat Heavy Electricals Limited. The audit firm is XYZ and Company Chartered Accountants. The engagement partners are Mr. X and Mr. Y, who were given the responsibility to look after the audit of BHEL. So 3 partners were there. Out of these 3 partners, 2 partners were deputed to look after the audit of Bharat Heavy Electricals Limited. Now what happened? Mr. Y is of the view that inventory of BHEL should be valued on FIFO basis, whereas Mr. Z is of the view that it should be valued on weighted average cost basis. Question is for the people now, whose view should be considered while finalizing the audit report of BHEL. So now 2 partners of the same firm are looking after the audit of BHEL. One partner is having a difference of opinion for valuation of inventory vis-a-vis the other partner. So question arises, whose view will be applicable or prevailing in the audit report? Any answer? Yes, ladies and gentlemen, any answer? So I got one answer from CA Narayananji. He say wise. So my question is why? And if you will write X, then I will ask why X. I got one answer from CA Tony Ji, review partner. This answer is correct. It is not the view of Mr. Y or Mr. Z or Mr. X. It is the view of the review partner that will prevail. You must be aware, I will not take the exact name, but very recently, NAFRA issued an order whereby one of the chartered accountant being auditor was debarred for 5 years. Why he was debarred? Because he was not complying with the auditing standards. Similarly, one of the review partner was also debarred. And NAFRA made this observation that in case of listed companies, it is a mandatory requirement that the audit firms shall depute one reviewer as engagement quality control reviewer. What I'm trying to convey, for this purpose, we have SA number 220. You can take a note. SA number 220. SA 220 deals with quality control for audit work, whereby it has defined engagement quality control reviewer and engagement partner. SQC1 is also there. SQC1 says for listed entities, you have to appoint reviewer, that is engagement quality control reviewer. What is the definition? Engagement quality control reviewer is a partner of the firm or the person engaged by the firm. So please remember, engagement quality control reviewer can be the partner of the same firm, or it could be any outside person also, who is vested with the responsibility to objectively evaluate the significant judgments made by the engagement team and conclusions made by the audit team in formulating the report. Please remember, if you are engaging outside person as engagement quality control reviewer, he also must be a CN practice. Who is engagement partner? Engagement partner is a partner of CA firm engaged in the performance of audit functions for reporting on behalf of CA firm. In my example, engagement partners are Mr. S and Mr. Y. Now, Mr. X, Mr. Y, and Mr. Z, I need to make a small correction. This is Mr. Z. Engagement partners are Mr. X and Mr. Y and Mr. Z. Engagement partners are Mr. Y and Mr. Z. Now, it is up to X, Y, and Z. It is up to X, Y, and Z to depute any one of them as engagement quality control reviewer, or depute any third person who is a CN practice to act as engagement quality control reviewer. So the correct answer is, in my question, the final view shall be of neither Mr. X nor Mr. Y nor Mr. Z, but of the engagement quality control reviewer. Who can be engagement quality control reviewer? He needs to be specifically deputed. He needs to be specifically deputed by X, Y, Z and company chartered accountants. Are you getting my point? So in this very question, if two partners are having different view, three partners are having different view, the final view will be of EQCR, that is engagement quality control reviewer. If you have any question over here, you are most welcome to ask. And please take a note, although the session topic is for SMP, but if you are having any listed entity, then if you are the auditor of any listed company, then it is a mandatory requirement for the chartered accountant firms who are the auditors to appoint engagement quality control reviewer. Murli sir, you are correct. X can also be made as quality control partner, but please ensure that such quality control partner shall not be engaged in the audit function. So who can be reviewer? Reviewer can be that partner who was not involved in the audit of the company. Are you getting my point? So X can be appointed as quality control partner, yes, because as per my question, he is not involved as engagement partner. I'm moving forward now. Next case study. The series case study. Mr. A is the statutory auditor of XYZ Limited for the financial year 21-22. certain provisions of labor law and fire safety rules were not complied with by the company. Mr. A reported in his audit report as follows. Since compliance with labor law and fire safety rules is primarily the responsibility of management and auditors are not required to see the same under section 143 of the Companies Act, the reporting about the same is not covered by the report. Simply putting, the question for the people is whether under section 143 of the Companies Act, I repeat, whether under section 143 of the Companies Act, we as auditors are required to check the compliance of labor law and fire safety rules. Tony ji, your answer is correct, Noklar, but Noklar will go into Code of Ethics. And my question is based upon section 143. Murli sir, your answer is partly correct because SS 700 is by default applicable. But what about section 143? So my question is, because see, simple thing is, wherever section 143 will come, SS 700 automatically will come. But my question now is whether under section 143, anywhere, any manner it is written or not, that auditors have to check compliance with labor law and fire safety rules. Is it written under section 143? Yes, any answer? So if I put on the screen, simple question is, the question is whether section 143 requires auditors to check compliance of labor law and fire safety rules for the company. That is auditing. So let me see the chat box. CA Tony ji, you are saying essay, but my question is not confined only to essay because essay is always answered. Essay is already answered by Mr. Murali, essay 700, and one is essay 250, compliance of laws and regulations. So my question is not directly with essay now. My question is with section 143. Rahul ji, you're correct. Essay 250 is applicable. If I put it like this, answer is essay 250, yes, it says so. Essay 700, yes. But question is, what about section 143? Is it saying something? Yes, any answer now? I believe you understood my question. Whether section 143 says or not to comply with the applicable laws like labor laws, fire safety rules, or so on. No, Rahulji. I'm not asking about ICOFR. ICOFR is a separate thing. What about laws and regulations? I'm asking about laws and regulations. So if I put it in a different way, alternatively, my question could be, if I say alternatively, the question is whether section 143 requires auditors to check compliance of other applicable laws and regulations. That's the question basically. Any answer now? When I will tell the answer, you will say, yes, we knew the answer. So just see very carefully. Very simple answer only. Let me type on the screen. You do have section number 143 subsection 2. What it says, express whether financial statements are reflecting true and fair view or not. Now, what is true and fair view? True and fair view means compliance with applicable laws plus applicable financial reporting framework, labor law, and fire safety rules are applicable laws, and that is why they're covered by true and fair view, plus their non-compliance may impact the entity. How it can impact? Say by going concern, litigation, penalties, fines, etc. Hence, auditor view is incorrect. That means section 143 is not silent about applicable laws and regulations. Section 143 uses the word true and fair view, and these words are entailing the compliance of applicable laws and regulations as well. Am I clear? Now, Murli, you're right. If it doesn't affect going concern, then you can always give EOM, and that thing is also dealt by SC 700. So the basic motive of this question is not what kind of opinion I need to give. The basic motive of this question is whether section 143 is dealing with non-compliance of laws and regulations or not. Am I clear with this question? Shall I proceed further? Okay. So I'm coming to the last case study. I'm skipping some of the case studies in between because much of the deliberation I made during the course of my discussion. I'm coming to this one case study. Other case studies which I have skipped, they are already discussed or are already answered within the PPT itself. So I'm coming to last case study, then we'll wrap up. Case study number 16. Mr. X was appointed as statutory auditor of LMN Private Limited for a term of 5 years, commencing from the financial year 1920. In the year 21-22, the company got converted into LLP, but he was still retained as auditor by the auditee. Mr. X was of the view there is no need to revise the letter of engagement that was entered into at the time of his original induction in the then company. So company got converted into LLP, but auditor remained the same. So question arises whether letter of engagement needs to be revised or can the old letter of engagement continue? Yes or no? What is your logical answer? Should we revise the letter of engagement or not? Answer is yes, there's a need to revise because constitution has changed. Earlier it was the company constitution, now it is the LLP constitution. So LOE, that is letter of engagement, needs to be revised. But is it written somewhere? Answer is yes. Answer is yes, it is written in SA 210. That is, in such cases, revise letter of engagement. I believe the point is clear to each one of you. So it is now 6 o'clock, 2-3 minutes are there to be clocked away. I'm stopping my deliberation over here. Should you have any questions, you are most welcome to ask. I'm stopping my screen share also. So Mr. Jose, if there are any questions, you're most welcome to ask.
Yes, sir, let us wait for a few minutes. As members, if any question, you can post on the Q&A box. Sir, I think there is only thanks messages are coming. It says that the session was very informative and useful for all of us here. Yes, one PS3 filed now in October 2023. Since money was paid now, are we to report in IAR? Yes, sir, there was one question in the chat box.
What is the full form of IAR? Internal audit report or something else?
Internal audit report. Internal audit report.
As far as internal audit report is concerned, you have to report over there.
ROC report. It's saying
ROC report. Answer is yes, you have to report. And the applicable standard over here is SA number 250.
Okay. I think no more questions. Thank you very much, Kamal sir, for that wonderful session on this standards on auditing. Of course, this is the one area we all, because we know the peer review is coming mandatorily within few years. And for listed company auditors, it's already mandatory, and now very stage-wise it's coming. And I'm sure it's within 3 years, it will be 100% covered for all the firms and all the auditors. So during that time, this is very, very important. Standards on auditing, compliance with the standards on auditing, documentation. So that's why we also had a peer review session on the peer review 2 days back, and we are having more on this kind of programs for enrich the quality of our profession. So thank you very much on behalf of Ernakulam branch and the entire 8 branches. We are NAVARATNA branches. We are 9 branches in Kerala. And all the participants here, I extend yes, gratitude from our bottom of our heart. Thank you very much. And now
Thank you, sir.
we will give you a memento in a virtual mode, but you will be getting it physical by physical courier there. So this is our memento. You can see the photographs which is captured during your session. So
this is known as a good internal control system.
Yes, sir. Yes.
No detection risk.
No detection risk. Yes. So we are reducing all the inherent risk here. So detection risk also, we don't have much. So thank you very much once again. We will be sending this to you, your home address. And once again, I thank all the managing committee members of Ernakulam and also all other chairpersons of other branches and all managing committee members of our other branches and all the participants here. So tomorrow we are tomorrow it's a holiday for us. There is no program tomorrow. And on Monday, one minute, I will.
Assessment procedures under GST.
GST, yeah, that is from, we are, yes, sir, you can please announce it. Yes, sir.
Monday on 17th October, we are having this we are having discussion on the topic assessment procedure under GST. And the speaker is Madhukar and Hiregange from Bangalore. I invite all the members to this seminar.
Yeah, that is hosted by Kannur branch.
Yes.
Kannur,
yes,
thank you so much, sir.
Yes, chairman of Kannur branch. So thank you, sir. Thank you very much. Thank you, everyone.
Thank you, sir. Thank you, sir.
Great
Thank
weekend.
you, audience, for your participation. And thank you very much.
Thank you. Thank you.